why interest rates really don't matter. Let's face it, everybody wants to pay the least amount possible. But there's some statistics that you might be interested in that might change your opinion on the rate and does it really matter and how much should it matter. This video is going to cover the two big reasons that in my 27-year experience, I think that the interest rate does not matter. My name is Jennifer Hernandez. I've been originating loans since 1995 and I've helped over 4,000 people finance their homes. My passion is bringing you real facts, no BS about everything mortgage so you can make an empowered decision. So let's get into it. So reason number one as to why interest rates do not matter is appreciation. So appreciation is the growth of something over time. It's something, if something's appreciating, it's growing in value. So the national average of home appreciation over time, we're talking back to the 60s. I think 1968 or the early 1960s was when things really started cooking in the tracking sector. So 3 to 5% is a national average. Now, of course, there have been ups and downs. If you look at the graph from Wikipedia that I'll put on the screen, there really hasn't been any dip. Now, sure, appreciation will come down and it'll minimize, but you don't see any reverse curves on the screen. So over time, 3 to 5%. So we're going to go over an example of how appreciation would affect you over time. Let's say your home price is $400,000. So year one, you buy it at $400,000. Now we're going to go 5 years and I'm going to take 4% appreciation, which is in between the national average of 3 to 5%. Year one, $416,000 would be your value. Year two, $432,640 would be your value. Year three, $449,000. Year four, $467,000. And year five, $486,000. That's an increase of $70,000. So let's say that when you bought the house for $400,000, you put the minimum down payment of 5%. That's $20,000. So in a 5-year span, your investment of $20,000 grew to $70,000. Y'all, that's a 3.5 times your money. That's 350% growth. Now, I don't know about you, but even if the rates were 10%, which we haven't seen even in my career in 27 years since 1995, that would still be a good deal. So house appreciation, I believe, based on the statistics, is one of the best investments of all time. So now we're going to get to reason number two. Now, if you're liking this video so far and you want more just like it, real facts, no BS about everything mortgage, please subscribe to the channel. Reason number two is leverage. If you're paying 6, 7, even 8% on your mortgage, think about what you could do with that money in the market. Now, I'm going to put another graph on the screen. I like third-party data so that you can see how things have changed over time. Now, I want to make a disclaimer here. This is not financial advice. I'm not a financial advisor. I'm not a CPA. I just do research online and I pull data from other sources. So I went to Motley Fool, and you can see here on the screen that Motley Fool has done the research. And over time, if you put your money into the stock market in the S&P 500, your money for 10 years would have increased 14.8%. Now, if you invest for 30 years is 9.9%. Over 50 years, it goes down to 9.4%. So you see, investing your money long-term has some real benefits. So normally, mortgage rates are lower than the increases in the stock market. Now, think of what you could do with that money. You could put it in a 401k, especially if your company is matching. You could put money in a 529 for kids' college education. You could buy another investment property. Investment properties bring rental income. That's diversifying your income and getting money from other sources. You could buy life insurance, disability insurance. There's numbers of things that you could do with extra cash flow over and above what you're paying on a mortgage. So this is why, in my experience and my opinion, leverage and appreciation are the two reasons that interest rates do not matter. Now, if you're liking this video, please comment, subscribe, share with a friend. I release 2 videos every week, and I've got another video for you right here at the very end on how interest rates are determined.